The book Rich Dad's Guide to Investing tells you Rich Dad's basic rules of investing. If you have a lot of money to invest, this book is for you. If you don't have any money, no worries, this book is still for you. This book teaches you to reduce your investment risk and to convert your ordinary income into passive and portfolio income. After this video, you will know how you can turn yourself into an ultimate investor like rich people like Bill Gates and Warren Buffett have done, even if you don't already have the money. Rich Dad's Guide to Investing is the third book in the Rich Dad series. If you are interested in the first two books, Rich Dad Poor Dad and Rich Dad's Cashflow Quadrant, you can find summaries for them in the description. If this is your first time here, take control of your finances by clicking the subscribe button. The book Rich Dad's Guide to Investing starts with a story where Robert is walking on the beach with Rich Dad and his son Mike. Rich Dad shows a piece of real estate that he had purchased. Rich Dad wasn't rich back then, he made less money than Robert's poor dad. So how could he buy something so valuable? He couldn't, but his business could. Let's go through the main points of the book. Point number 1. Different types of investors. In the book Cashflow Quadrant, Kiyosaki mentions 5 different levels of investors. In this book, he goes a little deeper, mentioning 5 different types of investors. Accredited investor is one with high income or net worth. Less than 3% in America meets the qualification of accredited investors, which are $200,000 or more annual income, $300,000 or more for a couple, or $1 million net worth. Qualified investors know how to analyze publicly traded stocks. They are usually accredited investors who have also invested in financial education. They know how to invest fundamentally and technically. Sophisticated investors understand the world of investing. They know the tax law, corporation law, securities law, and so on. If you don't want to build your own business, but you want to be a successful investor, aim for this one. Inside investors are investors that control businesses. They have the skills needed to analyze. You can control the businesses by creating your own business or by buying the majority of the stock of existing company. Ultimate investor owns a successful business that he later sells to the public. Ultimate investors are people like Bill Gates and Warren Buffett. Point number 2. The 3 E's. The 3 E's stand for education, experience, and excess cash. To become a good investor, you have to improve your financial literacy to be able to understand how laws work, how businesses operate, and most importantly, to read financial statements. Best way to get experience is by creating your own business. Start a business and when it fails, learn from that and try again until you succeed. The most important thing is to start now and to learn from your failures. Rich Dad told Kiyosaki that he was lucky to fail only twice, most millionaires fail 3 times. Excess cash will come to you when you have education and experience. Invest the excess cash to buy more assets. When you have all these 3 E's, you know how to take action when you find opportunities, and you will find many more of them. Point number 3. Good versus bad. To become a good investor, you need to know the difference between good and bad debt, good and bad expenses, and good and bad losses. To simply put, good means that it generates additional cash flow. Example of good debt would be buying rental property with the debt. Using debt as a leverage creates you more cash flow. With bad debt, you would buy a brand new car, a house, and a nice boat. This creates a bad spiral. To maintain this lifestyle, you need to take more and more debt. Example for good expense would be paying for tax advice. If you pay $1,000 for advice that saves you $10,000 in taxes, it was definitely worth it. And one example of a good loss would be depreciation from real estate. Now that we have talked about bad and good expenses, with a business you should aim to maximize your expenses and to minimize your income. Why? Because with a business you can spend before taxes and then pay the taxes with what is left. So buy more assets, books, and other education that grows your business. After that, pay the taxes. Point number 4. Investing is a plan, not a product or procedure. Many people think that investing is risky because they think it is as dramatic as in the movies. You don't have to go to the Wall Street and shout your head off. In fact, investing is simple and boring, like baking a cake. You follow your plan like a recipe. So, this means that you should make a personal investment plan. Think about what you want from your life, call professional investors and ask for advice. Make a simple plan with a start and end goal. The plan won't change, but the strategies will over time. Point number 5. Ordinary earned income, portfolio income, and passive income. One of the rich dad's basic rules of investing is to convert ordinary earned income into portfolio or passive income as efficiently as possible. You should keep your day job, but you should create a part-time business. Did you know that Jeff Bezos started Amazon in garage part-time? Doing business as a part-time teaches you communication skills, leadership skills, tax law, corporate law, securities law, and much more. Let's now take a look on how you can create your own business with the BI triangle. Point number 6. The BI triangle. The main point of this book is that you should create your own business that you then use to buy more and more assets. As mentioned in the second book of the Rich Dad series, the Cashflow Quadrant, to become rich, you should operate from the right side of the quadrant, the B and I side, meaning big businesses and investor. This way you will make money work for you instead of you working for money. But how can you create your own business? Well, the answer is the BI triangle. The bottom of the BI triangle is a mission. Your business needs both a spiritual and a business mission, especially on the early stages. The left side of the triangle is a team. Business and investing is a team sport. This is your business if you operate alone. Now, this is your business if you have a partnership with someone. With a team, your business structure would look like this. E stands for employees, hire excellent employees to operate your system. S stands for specialists, you don't have to know everything by yourself to run a business. Business owners work with specialists, and employees and investors take care of funding the business. A well-managed business consists of all of these 4. The right side of the triangle is leadership. Every team needs a leader. If you want to become a better leader, volunteer more in school projects, for example, to improve your leadership skills. Inside the triangle, the most important thing is cash flow management. It is a fundamental and essential skill if you want to be a successful BI. Delay taking salary until your business is generating cash flow from sales and keep your full-time job. Pay your bills promptly and have an investment plan. The next thing is communications management. The better at communication you are, the better your cash flow will be. In the middle of the triangle is systems management. A business is a complex system of interoperating systems. When one system fails, all the other will begin to fail. All these items listed in this triangle are separate systems. Next item is legal management. Avoid legal problems by hiring smart people that can help you with things like tax law, contract, and intellectual property laws. The last thing on the triangle is a product. Most people seem to think that the product is the most important thing in a business. But think about this, can you make a better hamburger than McDonald's? We all can. It's the system that makes McDonald's a successful business. So now that we know how to create a business, we can move to the last point. By the way, do you own a business? Let me know down in the comments. Point number 7. Becoming ultimate investor. To become the ultimate investor like Bill Gates and Warren Buffett, you need to create your own business. Start creating a part-time business using the BI triangle mentioned earlier. Don't focus on the product so much, learn to make a working system. Use your business to buy more assets. With those assets, you will generate more cash flow, which means that you can buy more and more assets. And for this, you need a business so you can buy the assets before paying taxes, not after paying the taxes. When you have a working system, you can make your company public and sell it to investors. Remember that most rich people have failed at least 3 companies before becoming rich. So keep trying and learn from your failures. Let's now summarize the video. There are 5 different types of investors. If you don't want to build your own business, aim for a sophisticated investor. They know how to invest fundamentally and technically, they know the laws, and they are financially educated. To become inside investor, you need to create your own business or buy the majority of shares of existing business. Ultimate investor owns a successful business that is later sold to the public. The 3 E's stand for education, experience, and excess cash. To become a good investor, improve your financial literacy. Best way to get experience is by creating your own business, and excess cash will automatically come to you if you master education and experience. There are good and bad debt, expenses, and losses. Use good debt as a leverage and pay well for experts. Create an investment plan. Investing isn't as risky as in the movies, in fact it's pretty boring and automatic, like baking a cake. Convert your ordinary income into portfolio or passive income as efficiently as possible. Use the BI triangle to create your own business. Each item listed in the triangle is a separate system that is needed for your business to work. Use your business to buy more and more assets before paying taxes. And lastly, become an ultimate investor by creating a successful business and selling it to the public. Oh, and one more thing. Robert Kiyosaki mentions that the most important investment you can make is an investment in ongoing education and searching for new ideas. This investment is easy to make. You can make it by smashing that subscribe button. You can start educating yourself immediately with my previous book summaries shown on the screen. Have a nice day and I'll see you in the next video.